With Donald Trump's business ties under scrutiny, Australia could heave a sigh of relief that the President-elect's interest down under has to date been so limited. Perhaps the closest link is in fact golfer Greg Norman, whom Canberra needed to tee up a post-election call to Mr Trump. But any relief should be limited, since Australia is really trapped squarely between this Trump-inspired reflation trade we've been seeing and the prospects of a US trade war with China. Expect the Australian dollar to bear the brunt. Now, the Aussie has become a very quiet trade. In fact, 2016 was its most peaceful year in a decade, with a trading range against the US dollar of just 9 cents. That's roughly half its average. Since Mr Trump's election, it has lost just 2% against the US dollar, making it one of the better performing major currencies. Supporting it are higher commodity prices. Against it are weak interest rate differentials and this trade war risk. Now, expectations are for the Aussie to weaken, but in reality, increased volatility is just as likely an outcome. Rising commodity prices have buoyed it recently and pushed the country to its first trade surplus in over 2 years. But those trade flows were all about higher prices, not volumes, and few believe that commodity demand is about to boom. Interest rates are also not in the Aussie's favour, with the Reserve Bank of Australia expected to stand pat this year, while the Federal Reserve is eyeing a series of rate rises. The difference between the yields on 5-year government bonds last month shrank to just 20 basis points in favour of the Aussie. That's the smallest gap since the year 2000. The trade war risk is very real for Australia too. China is by far its biggest trading partner, worth 30% of exports, and as much as its next four, Japan, South Korea, India and the US combined. For the past decade, the Aussie has been a reasonably simple trade. It reached its peak when it was boosted by a strong Chinese economy, strong commodity prices and high domestic interest rates. Even after the support from commodity prices faded, Australia still offered higher rates and was still helped by China's ongoing growth. Now those interest rates are vastly reduced and China's outlook is clouded by Mr Trump's very angry trade rhetoric so far. Australia and investors will need more than Greg Norman's golf and networking skills to get out of the rough this time.